It's not going to last me. Hello, welcome back to another episode of FU Friday on Go FUD Yourself. I am obviously caught a little bit off guard by how quickly we went live, complaining about my mint intake. But anyways, it's Friday. It's Friday, episode 102. Super excited. Fridays, as you know, are FU Fridays. So often we make a big long list throughout the week of all the people we would like to say FU to, and today is no different. So Ceara, how you doing?
It's a little bit different. We had a really friendly week with our 100th episode.
Yeah, there was a lot of love being shared.
Yeah, it was a friendly week.
Yeah.
Even our FUs today are like a little bit lighter. So we're actually going to talk about the Bitcoin bear market. It came up on my newsfeed last night that we have now lived through the longest Bitcoin bear market ever, specifically Bitcoin. So we're going to talk about that for a little bit, and then it bleeds really nicely into ETFs. So we can kind of say a little bit of an FU to the bear market, and we can also say a little bit of an FU to this ETF drama, but they're like light FUs. It's like a friendly FU.
All right. Well, let's go right into it.
JD, you've been here in the crypto space for a long time, right?
Yeah.
Like you're old as dirt?
Almost, yeah.
Yeah. So how many bear markets have you actually lived through?
3.
Lived.
3. I got in at the very beginning of a bear, thought it was still bull, lost money for one whole one.
Yeah.
And then had the 2018 bear. That was fun, and now this is the third one.
Do you were the bear markets all similar? Was crypto Twitter similar? Was it dead? Were people more fuddy, less fuddy? Like, what's kind of this bear market sentiment compared to the ones you lived through before?
It's always kind of the same. Fear sells, honestly, and so every bear market I've ever been through, crypto's going to zero. Crypto has no use case. Government hates it. Enterprise hates it. Institutions hate it. Countries all over the world are banning it or are going to make things a lot more difficult. The only difference this time around is the regulators are actually suing people.
Right. And this time we have institutions joining.
Well, this time is different now, but up until now, it was this more of the same. Up until like 2 weeks ago, when BlackRock and Fidelity and Wisdom Tree and Invesco and all these people came in saying, hey, we want the spot ETF. Like we want to play in the space. MasterCard making big moves. You know, there's a lot of stuff that's really evolved in the last few weeks that have changed the narrative significantly. Prior to that, prior to that, it was we're pushing everything offshore, which we still technically are if the SEC doesn't figure it out. But I think the narrative has just been that the US is not participating or is not going to find a way to participate. And you know, there's been a lot of negative sentiment. FTX, 3 Arrows, Terra Luna, Celsius, et cetera, et cetera, et cetera, et cetera. And so, I mean, yeah, I think it's the same but different, if that makes sense. Like it's more of the same.
I'm curious about you saying that institutions weren't playing, because like Deloitte joined during the bear market, right, with Avalanche, and also Avalanche News. Shopify joined a payment system during that time. Stripe joined crypto during the bear market. So like we had a lot of smaller institutional plays this time.
Yeah. Hey, before I forget, we're a live show Monday to Friday, 12:30 p.m. Eastern. All the places that we normally love, like, share, subscribe, help us get the word out. Okay. I had to do it.
It was not a helpful time for that.
That was the perfect time. It was perfect just to throw you and me right off our train of thought.
It's really bad for my shorts, though.
Oh, yeah. Shit.
Yeah, it's not helpful.
That's okay. People on shorts need to know that we're here Monday to Friday, too. Okay. All joking aside, I think there's 2 categories of enterprise. There is enterprise tooling and infrastructure, and there's enterprise liquidity. Those are fairly broad buckets. What actually will move the space forward in a significant way it's a bit of a cart and a horse, which one comes first sometimes, or chicken and egg, which one's first, in the sense that without institutional tooling and infrastructure, there is no institutional liquidity that comes. Without institutional liquidity, no one gives a shit about the institutional infrastructure and tooling. So what I think we've had in the past, MasterCard, Stripe, Shopify, Deloitte, they're all service providers, tooling, infrastructure providers. They're all on the fringes. All of that has to be in place before we can actually get meaningful institutional liquidity. That, in my opinion, is the inflection point, is when users that otherwise wouldn't or couldn't access blockchain finance, on-chain finance, now can via these institutions, which is a massive influx of liquidity and activity. All of that to say, assuming we can, continue the momentum we've built, and the SEC doesn't just outright, decline all of these applications for ETFs, I think we're going to see a pretty interesting catalyst relatively soon.
With that, though, we had these marketplace entrants during the bear market, and we didn't see huge flooding of the market. We didn't see, there were a couple of false bulls, I guess, but not really in relation to those institutions.
Yeah, there's almost always like fake outs and stuff, during, we see like a little blip, everybody's just starving for something positive. They get it, it pumps a little bit, and then everybody dumps it down. Like it's kind of pretty standard. We need, in my opinion, we need like a convergence of a few different narratives and vectors of momentum, I guess. And I think we're getting there. I think whether you're in the US or not, I think there's a lot of positive stuff going on right now that leads me to believe that, yes, we've been in the longest Bitcoin bear market potentially ever. Depends how you define a lot
we're gonna get into that. But okay, so you've been in these various bear markets. How did you know, for example, you entered in a bear by accident? How did you know? How did you accept that they were bear markets? And I don't mean what were your TA indicators, but I mean, what were those convergence points? Who did you see pulling out? Why was it suddenly a bear?
Yeah, that's a good question. And the truthful answer is I don't see that stuff well enough, which is why I'm still in the space. If I would have seen the writing on the wall, and in any one of those 3 cycles, I wouldn't need to be here anymore. So what happens is I believe so deeply in the long-term vision of the space that I have an impossible time selling holdings ever. Like if I only buy things I believe in, that I believe in the team, the tech, the vision, their roadmap. And I struggle. I absolutely struggle, even when it should be obvious. In hindsight, it's always obvious. It's always obvious what the top was. Yeah, of course. It's once it's happened, you can look back and go, oh yeah, okay, that makes sense. At the time, I think, there's a few things that are somewhat lagging indicators. I think VC, venture capital deployments. When you see near zero, when you see nearly no VCs deploying capital, chances are they have all been burned from deploying too much capital at too high valuations in a bull market. So usually that, by the time you see that, you're already in the bear, right? That they've already been burned a little bit. But I think a good indicator, at least from my perspective, something that I notice all the time but never really act on, is once the frenzy goes bananas with no due diligence, with where everybody's all the rounds are oversubscribed at these exorbitant valuations on pre-product, pre-launch. Look at Aptos and Sui in hindsight. They raised at 3 billion valuations, plus or minus, prior to network launch. That's insane. And so that generally, if you look at all the cycles, to me, that's probably the biggest fundamental analysis piece that I would lean on, but not financial advice, of course.
No. But then you were saying that you can sort of recognize that a bull market might be coming. You see that there's a convergence of elements. What sort of elements do you look for? This is me trying to bolster people's DYOR routine. So beyond the news, beyond us, what else should we be looking at?
I was going to say, what are you doing here? Trying to set it up so you can F you to me today, or what?
No, absolutely not.
No, so
I do that every other day.
It's kind of the same thing, honestly, in my opinion, just in the reverse. If I could time the bottom perfectly every time, obviously I wouldn't be here in my 4th cycle. Nobody really, market timing, if you get it right in hindsight, would be amazing. No one ever gets it right. If it was possible to get right consistently, it would be a totally different game.
Yeah, of course.
And so, but that being said, I think if you're paying attention to VC deployments and different things, we're now starting to see a lot of VCs that weren't deploying, taking meetings, starting to invest. Valuations have come down drastically. Shit projects aren't even getting looks right now, but good projects are. Good as defined by, is it a public team? Do they know what they're doing? Are they doing something novel? Is there a meaningful business case to be made for what they're trying to do? And all of that stuff being equal, I think then you can start to feel a little bit confident. Are we going to hit the bottom? Probably not. I mean, it's possible, but unlikely. So we're better off, I think, just to, try to play it smart, DCA in, DCA out. That's generally what most people that have been around long enough do. They DCA in near the bottom and they DCA out once they've made some good returns. Yes, you're leaving money on the table in a sense, but as soon as you acknowledge that you're never going to hit that top and market dump everything, some people do, which is, I think, does a disservice. I know some people that sold everything at the market top, but I know a whole bunch of people that sold everything early and a whole bunch of people that thought the market top was a little bit higher and rode it all the way down.
Yeah.
This guy. So, which is fine because I have pretty high conviction in everything I hold. So it just hurts. Your paper gains have disappeared.
Yeah. Your manifesto feels good, but your portfolio doesn't feel so nice.
Exactly.
So I think this is a good time to enter into the actual news that Bitcoin is in the longest bear market in history. And so the way that this is being defined is apparently different than traditional markets. According to literally cryptonews.com, a traditional market definition, like a stock market definition, says that there's a 20% drop. And when you see that 20% change return, that you're outside of that bear market. Or a bull market is when there's a 20% above the previous amount. Anyway, so what we're seeing here is that we now have negative year-on-year returns date to date. The last Bitcoin bear market was 353 days. And yesterday, late last night for North America, was 490 days. That's a long time. Has it been though?
It has, because the actual cycle peak was at the end of 21. Yeah. Like October, November 21.
I remember.
And it caught most of us off guard a little bit. At least it caught me off guard. We were just kind of coming out of COVID craziness. Conference circuit was fired up. A lot of us thought that we were going to have a little bit of momentum just now that people could actually do shit and, get together and whatever. But yeah, things started to slide. Often you see tax loss harvesting or tax harvesting in December. So a lot of people expected it to wait. And game theory suggests that if you think everybody's waiting to dump in December, you want to dump before then. And if you think other people are thinking that, then you want to dump before them.
Before then.
Anyway, yeah. So anyways, we ended up in October. And so,
our next bear market is going to start like after the next cycle. Our bear is going to start in like late August, early September. Just calling you that.
I hope not, because I would never have the conviction to sell that early. But
so what's interesting here is that that's Bitcoin, but we're also seeing some news about Bitcoin Cash and how they also have been experiencing this super long bear market. So I guess it's 22% lower than normal. And a lot of news is talking about DCA. So talking about the dollar cost average and how people are going against that norm of purchase, enter, and exit. And that's part of why we're seeing this bears. People are pulling out right now because they are fearful about the regulation. They're fearful about the outcomes of the ETFs. I don't know. Do you have something to say about that?
Yeah, no, I think, it's always when it seems like it's the least obvious. Like when everything seems like it's coming crashing down all at once, that's usually when you should start to say, okay, maybe there's going to be a turn of the tide slightly here. If we get a Bitcoin ETF, like this is a moot point. If a spot ETF is approved. And I think for all intents and purposes, many analysts are starting to believe that it's in fact coming. That there's a good chance. I mean, Larry Fink, we talked about this slightly yesterday, but has been doing the road show, to really evangelize Bitcoin and kind of stand up in its defense, when in years past, obviously he and many others, including Buffett, have been notoriously negative on, digital assets and cryptocurrencies in particular. I still think there is a distinction to be made between Bitcoin and other altcoins in terms of the perception of utility and value accrual, and also cryptocurrencies versus blockchain technology. Cryptocurrencies, until we have clear guidelines, are kind of in this incredibly awkward gray area right now. Once we have regulatory guidelines, though, then they will, in my opinion, it will look a lot more like a normal commodity or a normal security in which you can have actual value accrual in other ways. And so hopefully everybody gets excited about that, and away we go.
So you've already said this, but the hope for the end of the bear market is kind of based on these Bitcoin ETFs. And we keep seeing news that says, the Bitcoin ETFs, they're going to go through because people love them and BlackRock has political sway. But we've already seen them push back on the Bitcoin ETFs a couple of times this cycle. So is this like another, obviously we don't know, but I asked the rhetorical question, is this another false bull, or is this actually the start of that convergence of showing institutions interest in crypto?
I'll believe it when I see it, honestly. I'm kind of on the fence. I think, honestly, it would be insane if the SEC is trying to change perception, or if regulators are trying to change perception about the way that they're dealing with the space and trying to make it not quite so confrontational, for lack of a better phrase. I think they have to approve something like this. I mean, the largest asset manager in the world applied for the spot ETF in America. If you say no to them, it's going to be a huge problem.
Is that kind of like saying no to the youngest child? Like, by the time everyone's broken down and asked for what they want, and then we see BlackRock do it, it's like, we either have to give in now or really hold steady, right?
Yeah.
Yeah.
Sorry, my throat's super dry today, but yeah, it's I'm not sure. I'm hopeful that it's going to be positive. I'm not comfortable deploying, a lot of capital until we have some confirmation. And that's generally, if you listen to like expert investors and traders, they're always telling you about signals and then confirmations, right? So if you think it's a market bottom, you should wait for a few pieces of evidence that suggest maybe it was the market bottom and we've now since moved up. An approval of an ETF would be one of them.
I would say same goes for market highs. So some of the other news pieces that we have are like Coinbase surges, crypto token surges, Atom token surges, and then all of their secondary headlines are because of the high probability of a US Bitcoin ETF approval. And I'm like, that's conflating facts. Like, those things might not have anything to do with one another, but I do appreciate that people are a little bit optimistic about the ETF approval.
Yeah, it's an interesting one. Again, like I really hope we see it. I really hope, because it'll change everything. I think. I mean, if a spot ETF is approved, there's a few other things that I think would push this over. I think we're going to see a bit of a macro positive environment, I think, for the last 2 quarters of the year. I think 2024 could very likely be pretty ugly. And if that's the case, I think we might see a very stunted bull market until macro has a bear. But it's all speculation.
So since you were talking about influencers like Larry Fink going on the roadshow, so Larry Fink, who we all know previously was anti-crypto, and then he became pro-crypto, and now he's applying for ETFs. And you can follow that. We have a couple of episodes about that specifically. But he's on the road, like you say, he's kissing babies and going for it and trying to talk about how Bitcoin is like the international asset that's going to revolutionize the world. And then he suggests that it's an alternative to gold, because it'll hedge against inflation and currency devaluation, which maybe is the answer to de-dollarization. He didn't say that, but it's a thesis that you could make here. Anyway, I love this news because I want a gold-backed token all day long.
I'm like 99% sure there is a gold-backed token.
I know there is.
But the Bitcoin, like his thesis, at least now, which is a 180-degree turn from where he was a couple of years ago, which is of course, the politicking and the nonsense that happens at these levels of Wall Street, et cetera. But we'll have to see. I don't know if I'm quite as bullish on it being digital gold. I don't think there's quite the same acknowledgement of value yet. But I think, in due time and with some strength and with an ETF and with meaningful volumes and institutional participation, absolutely, it could be. Spreads will go down significantly. Liquidity will go up significantly with an ETF. That, of course, makes the asset more robust. Go ahead.
No, it's an interesting, exciting time where we have like a convergence of all of the technologies that we've been seeing in terms of TradFi and DeFi kind of coming together, but not necessarily working particularly well together yet. So, for example, these ETFs. And we also have this strange time when lots of people think that it's bullish and lots of people think that it's bearish. And so you see a lot of like false market indicators as people move things around. We saw USDT enter Cosmos this week. So we're seeing new ways for people to put money into crypto that we hadn't seen previously. I don't know. It just seems like a really strange, like you said, last couple of weeks, there's been a lot of different conflicting marketplace indicators.
Without a doubt.
Who do you want to see if you two? Who does that leave us with?
I don't know. There's been a lot of interesting stuff that's happened over the last little bit. It's rare that I don't have any strong convictions on who to say F you to, but I'm going to preemptively. No, I'm not. I'm going to give them the benefit of the doubt. We're going to leave our 3-letter agencies out of the FU this week.
Oh.
So I think my only major FU is going to be to all the scammers. FU to you motherfuckers. Beat it.
Yeah, they do create a lot of FUD surrounding.
Put that energy and effort into something positive, and it'll do the whole space a service, and I think we'll be better off in the end. Also, quick FU to Elon. I'm usually a big Elon supporter, but our ability to advertise and to use Twitter to its full extent is so stunted. And I mean, we had our 100th episode, Twitter Spaces got rugged. Like it's been frustrating this last week on the Twitter front. So hopefully Elon is watching the pod and he'll respond.
Did you run out of tweets on your tweet deck?
Yeah, I got nothing else. I got nothing else. But yeah, I think, it was a really good week in a lot of ways. I think there's good momentum. CFTC is, we talked about yesterday, getting on board and charging Mashinsky and different things. So I suppose there's some vindication for the last year and a half in some ways, that some of the idiots that were really causing problems are having to take responsibility for that, or at least are being put in a position where they may have to take responsibility for it. So that's good. And I'm definitely a fan of that. I don't know. Who else do you got FU for today?
I don't really have a lot of FUs. Yeah, usually I'm angry by now, but it's been a really positive week. There's a lot of confusing things going on. I agree with the FU to scams. There were some really major reports coming out about scams, and that doesn't make crypto look good. It doesn't make blockchain finance look good. But we're seeing a lot of testing ground in terms of regulation. We're seeing a lot of regulatory compliance from people. I can't even say FU to Larry Fink actively. He didn't do anything terrible this week. And usually I can pick on BlackRock a little bit. But well, happy Friday, I guess. It's not so much an FU Friday as like a fun Friday.
It's a fun instead of FUD.
Yeah.
Fun Friday. Quick reminder to everybody, because I would hate myself if I didn't. Live show Monday to Friday, 12:30 p.m. Eastern. All your favorite venues.
Everywhere.
Share, like, subscribe, bookmark on Twitter. Help us spread the word. And with that, Ceara,
go FUD yourself.
Go FUD yourself.